I would like to warmly welcome everyone to our episode of World of Short Selling. Each week I'm going to look at what has happened in the past week, what new campaigns you should know about, and what could still be actionable opportunities. Wow, what a crazy past 2 weeks for short sellers in so many positions, be it Tesla, Luckin Coffee, or others. With this episode, I will finally start to catch up on the content that has ballooned over this time period. Today's episode will be exclusively about Chinese companies. I will start with a summary of a lesser-known campaign on Vitasoy, which was targeted by Valiant Varriors. Vitasoy is allegedly a classic Chinese fraud exposed by looking at the subsidiary-level financials, the trick that appears to never get old. I will also follow up on QTT, the short of Wolfpack, which features similar allegations to Vitasoy, except QTT is up 44% since the call. I believe both could provide learning opportunities, if not investment ones, for other short sellers. Finally, I will quickly talk about NIO, the Tesla clone that is burning insane amounts of cash and which seems to be now in a now or never position regarding its business. Before we start, I would just like to remind you that all you hear on the podcast are opinions. I'm not a registered investment advisor. Please do your own due diligence. Short selling can hold risks that are different to going long. You should assume I'm short the names I discuss. I would also like to thank Breakout Point for data that I used in preparation for the podcast. Breakout Point is a great platform for those interested in tracking ongoing short campaigns. If you want to ensure that you do not miss any new activist campaigns or any updates to already published reports, be it SEC filings, new tweets by short sellers, or press releases by the targeted companies, do take advantage of my 10% discount code for the first 2 months for a subscription to Breakout Point. You can claim it by going to breakoutpoint.com and subscribing with the code podcast. The link is in the description of the episode. Affordable and flexible subscriptions provide a complete and timely overview of what is happening in activist shorting. The first stock I'm going to mention today is a $3.7 billion soy milk and tea manufacturer, which was targeted by Valiant Varriors. Due to the classic Chinese situation, the activist alleges that its subsidiary filings in China do not correspond to the company-wide numbers. Allegedly, Vitasoy has overstated its 3-year average operating profits by about 40% in China. Vitasoy reports an operating margin of 14.4% in the same period when it should have shown a margin of 6.9% according to the report. The same goes for its Australian subsidiary. The revenue matched the public record, but profitability is vastly different. Unsurprisingly, capital expenditure is also allegedly misrepresented. The company reported that they spent almost 700 million renminbi in 2018 in the consolidated financials, yet the aggregated SAIC filings show only about 175 million renminbi. This staggering discrepancy raises further questions. Both of these allegations are classics in the playbook Let's Short Chinese Companies. I have seen them play out many times. As if this was not enough, the report also points to material differences in margins between Vitasoy and competitors, who have lower margins because of higher costs. The difference between competitors and Vitasoy is roughly 50%. The company's margins seems to have been able to resist the increasing wages, larger workforce, and increased marketing spend, which seems too good to be true. Another textbook allegation check. Valiant believes that as the company will be forced to reconcile the numbers and show it to the public, the shares will continue to crater. The report sees up to 65% downside. I would personally add that Vitasoy does have assets in Wuhan as well, thus it is prime candidate to be affected by the coronavirus. The manufacturing capacity there is about 20 to 25% of the whole company. However, despite all these allegations and the Wuhan reality, the shares have failed to move so far. The stock is about 2% since the call. The shares could be held up actually by the company's response, of all reasons. The company went ahead and said that the report is baseless and inaccurate, nothing out of the ordinary. However, they also followed up on their first reply and delivered a rebuttal of the main points of the report. They say that the discrepancies can be explained by intercompany transactions that are not visible in the filings. This would explain the difference in profit. It is worth noting that on Twitter, GMT Research, which is a relatively well-known short seller, have questioned Valiant's assertion regarding the profit discrepancy in Australia. GMT stated that auditors are seeing the same public filings and are able to sign up the books, thus there might be some explanation here. But in China, this is harder to argue, and no one raised such a point so far. Valiant questions, of course, the management's response and pointed out the following. The reported difference in net income between subs and the holding company was about 91 million renminbi in 2018 and 227 million renminbi in 2019. Yet the SAIC numbers are roughly the same in the 2 years. This means the company is reporting similar profits on the consolidated level, but the subsidiary filings actually show lower profit, therefore bigger difference. This begs the question, which intercompany transaction could actually increase the profit by such a margin? One possible item, licensing fees from mainland to Hong Kong, should not increase by such a significant margin. The company also wrote about capex allegations in its rebuttal. According to them, the sub-level financials are inaccurate because of some newly acquired leasehold properties which would not show up in the subsidiary level filings. The short seller says that this raises new question as to why this should not show in the SAIC filings. Finally, the profit margin difference between Vitasoy and the competitors is dismissed by the company because of the wrong comparison that Valiant is doing. They say the competitors have different product offering and are of different scale. Nothing much one can reply here, but this is not the main point in any case. Given the ongoing discussion of the short seller and the company, I believe it will be super interesting to track how will Valiant follow up if the shares are still not going to go lower. This could give other investors interested in shorting a lesson on how to deal with such seemingly textbook case of Chinese fraud. I'm a big fan when it comes to researching Chinese companies, as one can learn quite a bit about how some of the frauds are done. Some of the Chinese companies are actually quite transparent about how they perform the fraud itself. That's why I selected Vitasoy and highlighted the campaign. So unsurprisingly, also, the next stock that I'm going to look at is a Chinese company, and it is a $720 million Chinese tech content platform with the ticker QTT. Wolfpack research targeted QTT due to allegedly severe red flags connected to accounting and corporate governance. These reminded the author of the blatant frauds featured in China Hustle. Unsurprisingly, the biggest point of the report were red flags connected to accounting. Specifically, QTT shows a large discrepancy between, guess what, the SEC and SAIC filings. Wolfpack also found significant discrepancies in subsidiaries themselves. Some were, for example, registered at empty warehouses, which is another classic move. One of my other favorite points was that Wolfpack even looked through the code base of QTT's website and found an interesting note attached to one line of the code which read, "Fuck, what did you gives me?" Wolfpack writes that this shows the lack of quality in their IT systems. They also said that the investors should be asking the question to the CEO of QTT. After Wolfpack raised this and many other allegations, for example concerning QTT's cash or business moves of the company, QTT responded 2 weeks after in the middle of Christmas break. On Friday, they rejected the report and provided some response to several of the allegations. However, 2 weeks ago, Wolfpack released another report looking over the QTT's response and raising questions that still remain unanswered. The short seller dismissed any effort by QTT to explain discrepancy between the Chinese filings and the SEC reports. In fact, it seems that QTT acknowledged the difference but did not provide any meaningful reason for this. The same applies to the dubious moves in cash interest earned by QTT, another classic red flag. Moreover, Wolfpack reiterates that several acquisitions done by QTT were supposedly tied to insiders, thus raising the risk of self-dealing. Finally, as a cherry on the top, Wolfpack points out that at the end of 2019 and at the beginning of 2020, some of QTT's subsidiaries were actually subject to freezes of their bank accounts. QTT did not comment on this at all in the response. Despite the situation, which seems to point to further exchanges between Wolfpack and the company, the stock is now up more than 40% since the initial report. For example, on the 22nd of January alone, it jumped about 12% in a day. This raises further questions, especially since, for example, the CFO of QTT resigned on the same day the stock jumped. I mean, your CFO resigns and the stock is up. Sure, I know nobody cares about anything these days, but this is still quite interesting. Wolfpack mentioned that they actually increased their short, so it will be very interesting to track this campaign and see whether QTT will eventually have problems with its auditors. It is also noteworthy that Muddy Waters have supported Wolfpack's view throughout the campaign and also disclosed a short position in the beginning. And the last Chinese stock that I'll be talking about today is NIO, a Tesla clone operating in the country. NIO has been a very popular short, and the recent spike, similar to Tesla's rise, have left many wondering what is going on, especially since the original short thesis continues to hold. The company has been burning insane amount of cash and has negative gross margins. This is a car company with negative gross margins. Some people estimate that the company is likely going to run out of cash in the next 2 weeks. Despite this, the shares actually rallied in January. However, it is highly likely we will get a glimpse of the current state of the business next week. This is because on Monday, the company will have to make a coupon payment of about $17 million to their convertible bondholders. This might seem like a negligible amount, but for example, the FT calculates that the company should be out of its cash soon. Thus, such a payment could become a material issue. Therefore, it seems that the company will have to announce some sort of positive news about its funding or about the business. It is otherwise unclear what the future now holds for the shareholders. That being said, this is an ADR, and thus the normal filings do not apply here. Do not forget that shareholders had to wait 3 months just to get results from the third quarter. However, even without a financial update, the coupon payment will tell us whether they were able to scrape some cash together. The bottom line is that perhaps, finally, the dubious fundamentals of the business, again, they incur negative gross margins on their sold cars, may start to matter in the next few days. Although it is possible that this lasts a limited amount of time before some Chinese entity saves NIO, even though this would not make any business sense. The past few weeks might as well serve as a warning to investors. NIO is likely not trading on fundamentals, it is likely trading on hopes, rumors, and politics. We will see what will bring this dubious business down. If you're further interested in NIO, I recommend listening to my interview with Jeremy Raper, who is short the company. And with that, that is it for this week. If you're interested in something I talked about, do not hesitate to check out the description. There are all the tickers alongside the reports I mentioned. If you enjoy this episode, do not forget to subscribe to the podcast. There will be new content each week. Thanks a lot for listening.